Phil, thank you very much for joining us today. How are things in Toronto?
Things are great, James. It's starting to get hot, feeling like summer, and looks like the uranium market's on a bit of a heater as well.
Yes, it's good to see. So it's been interesting to watch IsoEnergy and how it's evolved in the last few years. At one time, the company was strictly focused on the Athabasca Basin in Canada, but now you have operations also in the US and Australia. And I want to start our discussion focusing on your Canadian operations. You have 14 properties or assets in the basin, but the most advanced one is the Hurricane deposit. It has a resource of 48.6 million pounds, a grade of 34.5%. And many times when we hear these numbers, Phil, we don't fully understand them. And I want you to provide a little bit of context on these numbers and how significant they are.
Yeah, sure, and you're entirely right. It's very significant. Hurricane is in fact the highest grade uranium resource in the world, and at 34.5%. To put it in context, the global resource average grade for uranium is less than 0.1%. So 34.5 versus less than zero point 0.1. So it's not even an order of magnitude bigger. It's a step function bigger. But keep in mind, though, that the Athabasca Basin, where it's located, this is the highest grade place in the world to find uranium, and the existing mines are operating at very high grades. But even relative to the existing mines, Hurricane stands out. For example, Cigar Lake, a mine that's in operation today, is at 17%. So it's twice the grade of what's one of the highest grade mines in the world today.
And I think the other thing we should really focus on, like this is only a very small area. You have a 10-kilometer strike, is that correct?
Yeah, that's right. I mean, look, the deposit itself is unique on the grade, but we're really just getting started, and our Larocque East project, which is host to Hurricane, has 10 kilometers of prospective conductive corridor. And the way that these unconformity style deposits form typically is what's called pearls on a string. And what we mean by that, you picture a string of pearls where you have one pearl and then nothing and then another pearl, et cetera, and on you go. That's the way these deposits form. And to go back to the Cigar Lake analogy, which is a good analogy, it's the same kind of deposit, unconformity style hosted. Cigar Lake forms as a series of pods of mineralization along the conductor corridor. Today at Hurricane, we have one pod. So, and then we have 10 kilometers of prospective strike that could host additional pods of mineralization. And so, yeah, we're really excited to start testing further afield from Hurricane and see if we can find again those additional pods of mineralization and grow the resource.
So the idea is, so right now you have one pod, as you refer to it, it's 50 million pounds, but what you want is another one with another 50, and then you keep adding to that. So you go from 50 to 100 to 150.
Yeah, look, that would be ideal. And when again to go back to the Cigar Lake analogy, each pod is not necessarily the same. You can have bigger pods and smaller pods, and let's be clear, the pod that Hurricane is in and is remarkable and very, very significant in its own right. So finding another one would obviously be first prize, but it's not guaranteed. But finding smaller pods, let's say we find 5, 10, 15, 20 million pound pods could be extremely viable, particularly because if you build a mine around Hurricane, bringing those additional resources in along strike becomes economic because you've already sunk the capital and built that facility.
And one other point I want to mention on Hurricane is that this is only part of the body. The other side is owned by Cameco and Orano, and it's what it's called Dawn Lake. Maybe you can talk about that a little bit.
Sure, correct, correct. And the story of the history of discovery of this deposit really involves making the discovery, drilling off the ore body, and as we were drilling off the ore body, we were getting closer and closer to the property border, and that's the border that you mentioned between ourselves and the Dawn Lake joint venture of Cameco and Orano. And by the time we got to the border, we were actually in the best part of the resource, and it clearly continues across the border, and we know that because we can see it in maps, but also because of the level of activity that's happening across the border by Cameco and Orano. They are drilling extensively on their side of the border. They've not yet put out a resource, but they have put out sort of nuggets of information in different disclosure, whether it's on conference calls or in MD&A, telling the market that they are hitting the same kind of mineralization that we have on our side of the deposit. Again, we don't know yet how much they have, but we think based on what we can see standing on our side of the border and looking at the drill patterns and the number of drills that they put in, that they have at least what we have on our side. And this is why I was saying this is a significant resource. If we have, call it 50 million pounds, and they have at least 50 million pounds at 100 million pounds at this grade. And by the way, in this location, at this depth from surface, there's a very good chance that this is a mine in the future.
And that's a good point. How many pounds would you typically need to start a mine in the basin?
I mean, look, there's not one number, and it really comes down to the various characteristics that I outlined. So it's depth from surface, it's where it's located relative infrastructure. And that's an important point about this project. So we're on the eastern side of the Athabasca. We're where all the existing mines are, all the infrastructures, the roads, the power lines, etc. Hurricane itself is located 40 kilometers away from an existing operating uranium mill, the McLean Lake Mill. And so what that means is that lowers the threshold in terms of what it takes to build a new mine. If you were thinking about what the size of a resource would be required to build a mine in the middle of nowhere, it's not the same as what's required when you're right in the heart of the infrastructure. So I would hazard, and we haven't done the work on the economics yet on the project, but I would hazard that right around 100 million pounds is the level that would support a new mine at this project.
So we talked about many of the benefits. It's in the eastern part of the basin. It's close to infrastructure. You got the grade. Now you just got to keep building on the size. So why don't we talk about the exploration? You did some drilling this past winter, 17 holes. How were they?
Yeah, they were great. Really very encouraging. And what we did in that program was sort of two things. We were looking at exploration on two scales. One scale was immediately on strike from the known resource, so right around Hurricane, and we drilled 13 of those holes around Hurricane. Five of them hit significantly elevated radioactivity, the kind of radioactivity that we see in the resource itself on strike outside of the resource envelope to the east on our 100% owned property. So we were extremely encouraged by that. And they were on two trends. We have what's known as the main trend and the south trend. We had those types of results on both trends, and we're going to follow up on those areas this summer. In fact, we've started drilling already, and we'll be going again. And then the second level of exploration that we did was more regionally. So we talk about this 10-kilometer strike length. We've spent the last couple of seasons really sort of elevating different target areas within that. 10 kilometers is a big area. You don't just drill wildcats. So you have to do work to zero in on where those prospective areas are. We've found a number of areas that we think are quite prospective. We drilled one of them with 3 holes in this past winter. And one of those holes, again, hit significantly elevated radioactivity, the kind of radioactivity that we see in the resource at Hurricane. And this actually ranks as the best hole that we've drilled outside of Hurricane across the entire property. It's 2.8 kilometers away. It's in an area that we call Area D, and we're going to be following up there as well in the current summer program.
So why don't we talk about your summer program? How many meters, how many rigs do you have planned?
Yeah, so in total in the Athabasca, we're planning 11,000 meters. Right now, we've split that between the Larocque East property where Hurricane is and a second project that we have called Hawk. But we're starting at Larocque, of course, because of Hurricane. So we have one rig there right now. Our second rig is coming. Our initial mobilization into the project had been impacted by the forest fires in Saskatchewan. Those are starting to abate, and we're starting to open up some of the roads and the infrastructure that we need to get the camp fully open. That's all happening right now, and we expect to have 2 rigs turning very soon on the property. Again, we'll drill 7,600 meters there to start, but we're very flexible in the way we do our programs. And the great thing about uranium versus some other commodities when you're exploring is you know exactly what you have in the hole when you pull the hole out. What you do when you pull a hole is you run a handheld spectrometer over top of the core. That tells you if you have radioactivity. You follow up with a probe down the hole, also confirming that radioactivity, and that can inform your drill program on the fly. So if you have positive result in one hole and you weren't planning to drill right beside it immediately or in the program, you can change your program on the fly. So we could be doing more meters. We're still planning a total of 11,000. We could do all of those meters at Larocque, assuming we have positive results, again, with two rigs that'll be there very, very soon.
And I believe the depth at Hurricane is 350 meters on average. How does that compare to Area D?
Yeah, so it's 325 meters at Hurricane. Area D is more shallow, and it's a good point. As we go east on our property and over that 10 kilometers of trend that we have, the depth to the unconformity, which is the target horizon, shallow. So from the 325 at Hurricane to the far other end of the property, it's actually good to shallows to 175 meters. At Area D, it's about 275 meters.
So a lot happening in the basin. I want to move on now and talk about some of your U.S. operations. And you have three past producing mines in the state of Utah. Tony M is the most advanced. You're doing a lot of work there to moving toward production. Maybe you can just tell us some of the work you're doing.
Yeah, sure. And I think the important thing to highlight when we start talking about our Utah projects is it's a very unique portfolio of projects relative to some other companies that the watchers might be familiar with. In that these are past producing mines, and what that means is and not to oversimplify, but what it means is that ore has been taken out of these mines and turned into yellowcake and sold to utilities in the past. So these are very well-known ore bodies in terms of how they work and that they can actually produce yellowcake in a reliable fashion. But the other implication is that the infrastructure for these projects is already there. So it's very low capital cost to move these mines back into production. And for the first time in over a decade, we opened up Tony M, and you can see some pictures and some videos on our website. We're actually underground. There's 18 miles of underground development, meaning that you can go into the ore body, access faces of ore immediately for mining purposes. And it's a bit different than some of our peers who are starting to build new mines and there's a lot of capital, of course, associated with building a new mine. That's not the case for us. And again, just to highlight, the difference, I think, between this project, our projects, and some other projects. So now what we're doing is we're seeing what's happening in the market. The market is getting stronger. The requirement for domestic U.S. uranium production is real, and it's only going to increase as we go forward. And so we want to have this mine ready to turn back into production very, very quickly to respond to the market when it needs that material. And so we're doing a number of things this summer, including various technical studies, looking at optimizing mining, optimizing processing, optimizing trucking, lowering costs on a per pound basis, so that when we're ready to push the button, we have as I said, an optimized project. And the results of those programs will come out over the course of the summer here, and then we'll be ready to make a production decision later on in the year. And again, the third piece to this, or the other piece that's quite unique about the way we're situated in Utah, again, versus some of the peers, and they all have great attributes and things going on for them. But we importantly have a toll milling agreement signed with a company called Energy Fuels. And Energy Fuels is a producer of uranium today. They have the only licensed and operable conventional uranium mill in the United States working today producing uranium. We have an agreement with them where they will take our ore and process it on our behalf and give us back the uranium so we can sell it into the market or directly to utilities, however we see fit. But again, we're unique in that regard. We're the only company that has such an agreement signed with Energy Fuels today.
And you said you want to push Tony M into production relatively quickly, or do the work required that will put into production relatively quickly. But can that happen this year, or are we looking at 2026?
Look, it could happen this year. I mean, again, the great thing about Tony M is we're fully permitted, the mine's built, the infrastructure's there, the capex is behind us. So if we wanted to, we could take ore out of the operation today. But again, what we'd like to do is get the results from the technical studies that we're doing, feed them all into an economic study and a mine plan, and then be ready to make that decision towards the back half of the year. Of course, market conditions will sort of dictate whether will also be part of dictating whether we make the positive decision to turn production back on or not. But of course, but we're very, very positive about where the market's going, and we think actually that timing will dovetail nicely with where uranium and uranium prices are going to be, and in the second half of the year.
So I want to talk about valuation now in your portfolio because you have a large portfolio of assets, both in the exploration and also development stage. And I'm sure there's a lot of options, a lot of assets in there that are call options. Maybe you can just speak to some of the ones that you're most excited about and that can really add a lot of value to the stock price.
Yeah, for sure. And I think where you're going with this and where we think about ourselves is we look at the value of the company and we think about what Hurricane is worth and what our mines in Utah are worth. And we think that even on the basis of those assets, there's upside for the company on that just based on those assets. But hidden behind those projects, we have again what you aptly call options. We have some projects that are very significant projects in their own right, very large resources, very high grade resources that for one reason or another historically have had impediments to development. And this is not uncommon in uranium. Uranium is a very difficult mineral to bring forward into mines. It's not there's jurisdictions that have gone in and out of favor for uranium, and we happen to have two of them in our portfolio that on their own would be company making assets, but because of these historical impediments, we were able to acquire them for very, very low costs. And so now we're working on uncovering those impediments. And the two projects specifically are the Coles Hill project in Virginia in the United States. This project is the largest uranium resource in the country, bar none. And it's larger by two or three times than the next largest resource that's known about today. The challenge with Coles Hill is there isn't a uranium mining code in Virginia. So technically, we cannot move this project ahead today into operations, but we're getting a lot of good indications that the potential to overturn that effective moratorium on uranium mining in Virginia and put those regulations in place. There's a lot of impetus behind doing that, particularly with some of the things we mentioned previously about the U.S. being the largest uranium consumer in the world, looking to bring domestic production online. There's no project in the country that can deliver the number of pounds per annum that Coles Hill can. And so we're starting to get a lot of support from the different administrations, both federally and in the state, for moving this project ahead. And so we're doing work in the background to help support those that the groups that are interested in helping to see this project move ahead. And we think we could surface quite a lot of value for the company if we can make some progress on that project. And so it's pretty exciting times to be in the U.S. with the largest uranium project at Coles Hill. And then the second call option is the Matoush project in Quebec. Again, this is a project that was a company maker in the sort of uranium bull market of '06, '07, '08. It's a very high grade project. It's almost 1%. And again, not relative to the Athabasca Basin, but as far as the rest of the world goes, it's one of the highest grade projects outside of the Athabasca Basin. It's a decent sized resource at almost 30 million pounds. But here, there's been a historical impediment with getting social license and acceptability by the local First Nations. And we're working on that right now. So we're developing our relationships in the community. We do have very strong relationships with First Nations in Saskatchewan. We have a collaboration agreement signed with the Yethaneni that covers a lot of our projects in the Athabasca, and we have a very good relationship with them. We're trying to build that same relationship in Quebec and unlock that project. So those projects we think get very little value in our market cap today. If we're successful in building those relations and getting support for those projects in those jurisdictions, we could unlock tremendous value for shareholders.
I just want to go back and make a point about Virginia. It's interesting that even though they have this moratorium on uranium mining, they're a big producer of nuclear energy.
Well, that's right. And in fact, they're looking to grow their nuclear fleet dramatically. And it's driven largely by data center demand. So one thing that I've learned being in Virginia with this project is that Virginia actually has the largest number of data centers of any jurisdiction in the world. And so It requires a tremendous amount of power, of course, and they have ambitious plans to grow the number of data centers in Northern Virginia by 50% or even 100% by some estimates. And so it requires a lot more power. A number of the giant tech companies have already talked openly about bringing new data centers to Virginia and supporting more nuclear power, whether it's large scale reactors or small modular reactors. It's all coming to Virginia. So here you have a state that is pro-nuclear, requires uranium on an annual basis, and has the largest project, largest resource in the country. I think the table is set for making a big push here and hopefully ultimately moving the project ahead.
And has there been any discussion at all from the state about opening or removing this moratorium?
Yeah, look, we're in ongoing conversations with various levels of government, whether it's federal or state, on that front. And I think what they're looking for is a group that can shepherd this project forward in a safe, reliable fashion and generate significant benefit to the state. And I think that we're being recognized as that kind of group, the group that could do that. I mean, we're a very well-financed business. We have very strong shareholders behind us, group and a team of experts who have done this time and time again in the uranium space. So we have a significant amount of credibility when we go into those meetings, and it's starting to show in the kind of support that we're getting.
So, Phil, I want to move on now and talk about your balance sheet. You recently did a raise for $50 million. What is use of proceeds?
Yeah, so look, the use of proceeds is largely for the United States, and really the capital raising is opportunistic in the sense that we see the future being in the United States. We're well funded for our Canadian exploration. So the all of the drilling that we talked about in the Athabasca Basin, we raised $20 million of flow through earlier this year that's earmarked specifically for that. But what we wanted to do here with this more recent capital raising is accelerate our plans in the US. So all of that work that we're talking about at Tony M and potentially opening it up, that's funded with this fundraising. On top of that, and maybe on a future call we can talk in more detail because we haven't made these plans public yet. But we have big exploration potential on our properties in the United States, and you can and what I would say about that is these are projects that have been known about for a long time. The resources are in place, but there's low-hanging fruit for exploration that just hasn't been looked at in decades, quite frankly. So we've got a plan together, a team together, ready to move forward on those exploration plans. And again, so use of proceeds is really to drive our U.S. operations forward, technical studies, bulk sample at Tony M, exploration programs at all of our projects in the United States. And so I think that it's really going to allow us to sort of turbocharge those assets and have them ready to move forward and ready to deliver results into, again, what we think is going to be a very strong uranium market, particularly in the second half of the year.
And when it came to raising the $50 million, how did it compare to previous years and previous raises? And I'm just trying to get a gauge the level of interest. And where did the interest come from? What jurisdictions?
Yeah, look, the level of interest was strong. The anchor investor in all of our financings is NextGen. So for watchers that don't know this, NextGen is our largest shareholder. They own about 31.7% of the company today. They're effectively maintaining that interest in this financing, and then the rest of the book was institutional investors all over the world. This is, we're a global story and our investors are global. There's significant appetite for uranium in Australia, for example. Lots of investors came in from there, in Canada, of course, in Europe, and then in the United States. And one of the things that we did recently was we listed the company on the New York Stock Exchange as part of broadening our U.S. investor base. And we had a number of new U.S. investors that came in to this financing on the back of that U.S. listing, and we think that trading liquidity, particularly in the U.S., will pick up over time. Our peers, for example, trade two to three, sometimes larger number of shares in the US versus Canada. So we think that's a big opportunity for our company, particularly because of the nature of our portfolio with such a significant resource base in the United States and a lot of activity going on this year. I think that's a big opportunity for us to gain more U.S. shareholders because, of course, that's the largest pool of capital on the planet.
And when you look at the US market, like in the last year, the last 2 years, do you think there's a lot more interest coming from US investors just in the nuclear and uranium space overall?
Well, 100%. I will tell you that it's been a roller coaster. So the interest has come in and come out a few times over the last year and a half, mostly in lockstep with uranium prices, which had run up to over $100 and pulled back to below 70 and are now north of 70 again. And so the US market does sort of the moment when the momentum's there, it piles in, and when the momentum wanes, it sort of piles out. I think it's ready to pile back in. And of course, a lot of it is tied to all of the headlines that we're seeing around the growth of nuclear power, tied to AI, tied to low carbon power and just the growth of nuclear around the world, whether it's large reactors or small modular reactors. It's all happening. The headlines are coming in fast and furious on a weekly basis, and it's alerting these investors to the space. And I think they're coming into the uranium side, but the floodgates will open at some point, particularly if we see a significant prolonged move upwards in the spot price.
Phil, a big part of your strategy has been growing by way of acquisition. Will you continue on with this strategy?
Yeah, look, I think that I have a couple of things to say about that. I think there will be more M&A activity in this space. And we've already seen quite a bit. We've seen, a number of players get together or make acquisitions to get bigger. And it is true that the bigger companies get better valuations, better trading liquidity, better access to capital. And so getting bigger is an important reason of doing M&A. And I think that that's at the larger or medium end of this space, there will be more of that happening. What I can tell you is that because of the nature of hurricane and what we talked about earlier on, I think our name is on a lot of people's lists. They see that you can't just go out and find an asset like that. This asset is unique, and it would be a gem in virtually any company's portfolio. So I think our name is in the mix on that front. So when we talk about more merger activity, at the same time, I believe, and I can see it, there's a disconnect in the market between the very small companies and the larger companies in terms of valuations. And there are select single asset companies that have assets that are mispriced in the market, and that's how we've made this business. We've made a history over the last 6 years of buying mispriced assets and then putting our skill set to bear on it, whether that's financial, whether that's technical, whether it's government and community relations. That's what we do. And so I think there are opportunities out there for us, and we're going to pursue them selectively. And if they make sense, we'll absolutely do them. The other part too that we've done successfully, I believe, in the last couple of years is rationalize the portfolio. We do have a lot of projects, and if projects don't look like they're going to fit into that multi-asset producer category, which we would like to become, then we would look to divest some of those non-core assets, again, like we've done historically. And so long answer to a short question, yes, we're going to be very busy on the M&A front going forward, I believe.
Phil, as we wrap up, you've already provided a lot of detail on what you and your team will be working on in the coming months, but maybe you can just summarize for investors what they can expect in terms of news flow in the next couple of months.
Yeah, look, I think it's really it's the tale of two things. It's exploration drilling in Canada, results pending and results coming regularly because of two rigs on our property, one rig on the Pure Point property. And so we'll be very busy delivering those results to the market. And then secondly, in the United States, again, thanks to this recent capital raise, we're going to accelerate our work programs in the US, and it will generate news flow in a number of fronts, whether that's the results from technical studies, economic studies, drill programs, bulk samples, other works that we're doing in the United States. So there will be a very strong cadence to the news flow, sort of back and forth between Canada and the United States over the next 6 to 12 months.
Well, that was a great update, and I want to thank you very much for spending time with us today. Once you determine your plans in the US and how you're going to allocate that $50 million, let me know. I'd love to have you back on again to hear the details. Once again, Phil, thank you.
Yeah, thank you so much. Great chatting as always.